Greetings dear traders, and you're watching the Daily Market Review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated as traditional to the technical analysis of Forex measures. And let's start our review from the first pair. First major, it will be intraday analysis of Euro and US dollar. So, what I have here. Corrective Euro gains will look to force a break above 1.3174 and 1.3196 in order to reopen last week's high at 1.3229. Monday's low at 1.3104 has damaged the short-term uptrend from the April 16 reaction low at 1.2994. But last week's bullish outside week and bullish engulfing candle offers Euro bulls support to their cause. A reversal below 1.3104 would put Euro bears in control, exposing the 1.3057 and 69 higher lows and leaving the 1.2994 low vulnerable. Weekly chart of Euro and US dollar trend is range. Next pair, intraday analysis of US dollar and Japanese yen. Another wave of US dollar weakness during Tuesday's Asian session exposes projected support at 80.39. An intra-wave lower high at 81.20 has been confirmed, extending the decline from last week's high at 81.78 and leaving the April 16 reaction low at 80.29 vulnerable on concerned weakness. A recovery above 81.08 would provide respite, but only above 81.20 would negate the US dollar bearish outlook. Weekly chart of US dollar and Japanese yen trend is bearish. Next pair, intraday analysis of Great Britain pound and US dollar. The October 2011 lower reaction high at 1.6167 remains in the focus. As Monday's inside day bolsters last Friday's push into fresh 5-month highs, the powerful short-term and medium-term uptrends have created scope for further Great Britain pound gains to 1.6268 and 1.6291, as Great Britain pound bulls remain firmly in control. Single print support at 1.6001 from last week's market profile underpins the Great Britain pound bull tone, which is protected by Monday's low at 1.6076. Weekly chart of Great Britain pound and US dollar trend is bullish. Next pair, intraday analysis of US dollar and Swiss franc. Consolidation of Monday's high at 0.9172 has scope to 0.9104 as the action remains US dollar bearish within an 8-week bear pennant continuation pattern. However, a sustained break below 0.9104 is required to bring last Friday's low at 0.9084 back into the immediate picture, threatening further weakness towards the pennant support line at 0.9042. Regaining ground above 0.9162 is required to reopen the 0.9172 high. Weekly chart of US dollar and Swiss franc trend is range. Next pair, intraday analysis of Australian dollar and US dollar. It's our traditional last major. So the focusing on the important April 11 reaction low at 1.0226. Following Tuesday session weakness, the pace, the decline is gradually increasing, and the break below 1.0226 would prompt fresh 3-month lows, creating downside risk to 1.0203 and 1.0178. A recovery above 1.0328 is required to question the Australian dollar bearish outlook, opening 1.0386. and the weekly chart of Australian dollar and US dollar trend is bearish. Okay, let's repeat all these trends again. Euro and US dollar trend is range. US dollar and Japanese yen trend is bearish. Great Britain pound and US dollar trend is bullish. US dollar and Swiss franc trend is range. Australian dollar and US dollar trend is bearish. Yes, my dear traders, that was all for today. It was me, financial analyst of Grand Capital Company, Sergey Lin, with you in the studio. I wish you the fair trends, and of course don't forget to visit our website. It's www.grandcapital.net. You will find there a lot of analytic information. You will find there also a lot of bonuses and contests, which you would be, I think, might find interested. So, I wish you the fair trends, and goodbye and good luck. Bye.